Yeah, Mr. Rao, you can start the program.
Yeah, very good morning, good afternoon, and good evening, distinguished participants, ladies and gentlemen, friends, CMAs. I'm NVP Chalapati Rao, the Senior Vice President of Indian Society of Management Accountants, and I will be the moderator of the webinar today. Before we start this webinar, one of my colleague, Mr. Gopal, who is from Ghana, who has joined, he was talking about Rakesh Junjun Bala. So before we start the presentation, my condolences on behalf of Indian Society of Management Accountants to Rakesh Junjunwala ji, who is known as the billionaire investor, the Badsha of Bombay Stock Exchange. And if I'm not wrong, he was holding a net worth of 5 billion US dollars. It's a big loss to the country, to the finance professionals. So may God rest his soul in perfect peace. Om Shanti. Okay, now I'm pleased to welcome to all of you to the webinar on SAP Business One overview and cost accounting. Last month, we had a webinar on SAP B1 overview on financial accounting. Okay, this is the second part of our web series on SAP Business One. The objective of the program is to make the CMAs and the finance professionals aware of SAP Business One, which is a complete set of accounting and financial tools that provide clear visibility into the business and greater control over financial operations. This will help the business to move forward and compete effectively in the digital age. This webinar will enrich your knowledge and enable you to take better financial decisions with more insight. Ladies and gentlemen, I believe that by participating in this webinar, we are in the right place at the right time. Together, let's accelerate the exchange of ideas and scale up good practices. On behalf of ISMA, I wish you all a very, very successful webinar. Let me introduce to our eminent speaker today, Mr. Dilip Sar, who is a professor from Indiana University, USA. Mr. Dilip is the president of Kabir Consulting Inc., Kabir India, and Kabir subsidiaries in Nigeria, Bangladesh, Philippines, and Kenya. He was an associate partner of IBM in USA. He worked as a senior director with Accenture and Capgemini in New York, USA. He has been working in SAP across the globe since 1998. Mr. Dilip is on the advisory board of Small Business Development Center, SBDC, SBA entity in New Jersey, USA. He is the chairman of IT panel for MSME appointed by Government of India. He is visiting faculty to various universities across the globe. He has written several papers on SCM topics and provided business process improvement consultancy to more than 400 clients across the globe. Mr. Dilip taught more than 5,000 students in SAP and IT. Mr. Dilip holds a bachelor's degree in mechanical engineering. Today's program is approximately for 1.5 hours, which includes presentation by our honorable guest Dilip ji, followed by question and answers, which will be handled by me. Then we'll be presenting a certificate of recognition and followed by vote of thanks by Pankaj ji, who is the founder president of Indian Society of Management Accountants. He is the past president of ISMA. He is the chief mentor of Jain Ventures. Okay, this is how the today's profile is. And before we go further, before I'm handing over it to Dilip ji, okay, let me say a few words of Abdul Kalam ji. Abdul Kalam ji, our president of India, he once said, "Learning gives creativity. Creativity leads to thinking. Thinking provides knowledge, and knowledge makes great." Okay, so this is a very good platform for all of us to learn from Dilip ji. So Dilip ji, over to you.
Thank you very much. And I hope my voice is clear to everyone and everybody can hear my voice.
Yeah.
Okay, let me also share my screen. So is my screen visible now?
Yeah.
Okay, very good. Thank you. So first of all, thank you for all the introduction and also putting a context. So let me also recap some of the things which we did in the last session, and then where we are in this series. So what we discussed basically was that in SAP B1, we have following accounting processes covered. So when we say like what kind of all different processes are covered. So the first and foremost is it covers financial accounting. Financial accounting we discussed in the last session and we discussed in the last class. Then we have cost accounting, which we're going to discuss today. Then there's asset accounting, which we wanted to discuss in the future sessions. And then we have budget accounting, which possibly we want to discuss in the future session. So financial accounting, we have discussed that how in the purchase process and sales process, system recognize different accounts and how the different account determination happens and how different revenue and cost being recognized during sales process, and then different liabilities being created, recognized, identified during purchasing process. So we discuss sales cycle from the revenue perspective, cost of goods sold perspective, and then we talked about purchasing cycle, in which how we can create purchase process with the purchase vendor liability, etc. Today's focus is going to be on the cost accounting. So how does the cost accounting works in SAP space? So let me first and foremost go through some of the concepts. So cost accounting and budget accounting. So in SAP, and I will send this training material as well. This training PDF, which I'm talking and referring, this is SAP prescribed training material. And I will also send the PDF form of this document as well. So all of you has these concepts, these PDF as well. So if you see here, I don't know if it's visible because it's pretty small, that this is SAP prescribed training material. So I will share that also. Because we being a partner, we have access to this training materials. We'll share that as well, so you have. So what SAP cost accounting? Now there are so many things in the cost accounting, 1 hour and all that is not sufficient. But at least the core principle, the fundamental principles of the cost accounting, which is there, at least those we can discuss and talk about in this session today. So for example, if the company is divided into different departments, just an example, sales department, support department, development department, production department, many other departments. So one of the dimensions in SAP could be department. It does not always have to be department. We'll talk about that also. You can do business lines, different dimensions. Department is one of the dimensions. Department can have a revenue, can have a cost. Now, we are doing our financial accounting. We talked about that. Now we want to divide our company into each business activities. Now those business activity could be by product lines, could be by different business functions like departments, and many others. We can define different cost centers and profit centers. You can post cost, you can post revenue, you can post both. Then you can define distribution rules. And we'll talk about a bit more on this distribution rule as well. So when we define the distribution rule, so that basically means we can allocate direct and indirect expenses, direct and indirect, to one or more cost centers. In SAP, cost centers can take cost, can take revenue, can take both, depending upon what kind of a cost center it is. It can allocate direct expenses. It can also allocate indirect expenses as well. We will post some of those transactions as well. So we'll create some cost centers and we understand that a simple cost center. And then we will also try to post some of the documents and see some of the reports, simple reports based upon that. That is what we will be targeting to do. So after talking some of these theoretical concepts, we will also see in the system, we will see the system demo, we will see the cost center, we will see the distribution rule, we will see that how the cost can be assigned to different cost centers, and we will also see how we can run different reports. So we'll see all of them. So we talked about. Now the very first thing which we have to define is the cost center. Now let's log into system also. So when we go to financial accounting, in the financial accounting, there is a cost accounting. In the cost accounting, the first and foremost, if you see here, there is a dimensions. Now you can have a multiple dimensions. So here in the system, we have a dimension of department, we have a dimension of line of business, we have a dimension of the work location. These are three examples of the dimension. There could be others also. So that basically means when I'm defining my cost centers, I can define them by department, I can define them by line of business, I can define them by work locations. Line of business basically means you can have a different product lines. So this is one product line, this is another product line, this is another product line, this is another product line. You can also have by the work location. You have one sales office, you have another sales office in location this, location that, location in Delhi, location in Chennai and Mumbai, and other dimensions. Then we can define the cost center. So cost center setup. There are numerous other cost centers already there. So if we see here, there is a cost center. So there is a cost center C0006, sales office Delhi is assigned to department dimension effective from this date to this date. This is maintenance department. So this is a cost center, maintenance department, dimension department. This is HR department, cost center C0004, dimension department. There is a marketing department, C0002, dimension marketing department, effective from this date to this date. Production department. And similarly, you can define as many as there is a cost center C001. This is sales office in Mumbai. So similarly, we can define different cost centers. So let's say I want to go cost center and I want to define a cost center called C002 and I call it sales office in Chennai. So this is our Chennai sales office. Just example, it could be whatever. It assigned to dimension. Which dimension it is assigned to? department, line of business, work location. Why 3 dimensions coming here? Because those are the 3 we have defined. So we can have many cost centers. Some can be defined by department, some can be defined by line of business, some can be defined by work location, etc. This is valid from this date and is valid from and going to some date in the future, whatever. This date to this date. And we add. So what happened? We are able to create a cost center. Simple. Similarly, we can define different cost center. We can assign to a dimension. What basically that basically means? So there is a dimensions. Then there is a cost centers, which can be assigned to the dimensions, or dimension assigned to the cost center. Both are linked. This cost center to this department. This cost center to this department. This cost center to this line of business. This cost center, this line of business. That is what we have. Now, there is a distribution rules also. Now, distribution rule basically means that in any of these distribution rules, which we can define. So this is a marketing department. So this is my code from this date to this date. We can also, so this is C002, which we configured today, our sales office for Chennai. That is a new department we have created in Chennai office. And then is a direct allocation of the cost. It is active, and 100% cost allocated to that will be assigned to it. We could have done division also, that if we incur the cost in this, 60% go to Chennai and 40% goes to Bangalore or some other department. But here, 100% going to this. So this is the distribution rule. A simple example of the distribution rule. Now, another thing which you can do here is cost center hierarchy also, which basically means that within the cost centers, you can have a hierarchy of cost centers. So that basically means there is a parent-child relationship between cost centers. So here we can say dimension is this, template is this, line item is this. Now here we have the first line item, and then we can add. You see that here, add child cost center. So we can also define the parent-child relationship between the cost center. One cost center could be parent, and within the parent you can have a child, and within the child you can have a sub-child, grandchilds, and they can do accumulation of the cost as well. So that is why if you see here, this is a cost center hierarchy in the dimension department, template department, item number 1, and we can add cost center. If you want to add the cost center, you can add cost center. Then we have a different cost report. We will be looking at this cost report also. Now, so we talked about, we can define. Now there is something called short code here. Now short code basically is a grouping. So we can have a different short code. If you go back to the cost center. So here there is a field that is called short code. Short code basically means that, okay, in the real world, you might have many cost centers. So let's say if you have 100 cost centers, how do you logically group them together? Okay. So in order for us to logically group together, we can have a different short keys. So short key is basically grouping of the cost center. That is what we see here, the short key. We talked about distribution rule. In the and we just discussed here that we can define distribution rule. And the distribution rule, we can have different distribution rules. Now what happens is, what SAP does, distribution rule setup. Let's say this is what we did today, right now. And what we did, that This is my rule. The cost center code and dimension code are always same. They're 1-to-1. That is what we see here. When you create a cost center, system automatically create a distribution rule with the same ring. So what happened is that when I create a cost center C002, it also created dimension rule C002 with the same ID. Effective from the August 14 to whatever August 30, whatever 5 days we want to do. This is assigned to the dimension department 100%. That basically means 100% the cost will go to this incurring in this sales office will go to this sales office. It's a direct allocation. And that is what we see here, 100% distribution rule. And we can assign directly to that. Now there is also distribution rule link between general ledger and the cost accounting. Now let's understand that general ledger is the master data. General ledger is the most important master data. We talk about chart of account also. So here, in the last class, we talk about chart of account. So let's say I go to chart of account. So this is chart of account. So when I go to this chart of account, then here we have a different, this is my liability account, this is my equity, this is my revenue, this is my expenditure. So these are different expenditure accounts. So that basically means, so for example, I have electricity bill. Okay. If I have electricity bill, and this is my expense, and here we have a distribution rule also. Now, one more thing, in SAP, project is also a cost object. So in SAP, cost center or profit center is a cost object. Similarly, you will also see the project, because we have a lot of customers, they do different projects. So there is a customer, they do the solar power project, some engineering projects, some construction projects. And so if you see here that along with the distribution rule, which is assigned to this GL account, electricity bill, just an example, there is also project, means you can link this GL to a project also. So that basically means the cost which is incurred for cost and revenue both by the project, you can run your P&L by a project also. So now we are not talking about the project accounting, maybe some point of time we can talk about the project accounting also. So there is a, that is not what we are discussing today, but because the project appears, so I just touch base upon it. So here we have a department. Now, if I want to put in a department here, and then this is the sales office, Chennai, and we put this, we assigned this GL account, which is a 610000 to the distribution rule department, and then we associate that distribution rule here, which we created C002. This is what we created, and then we assign that automatically to this GL. We can update. That is what basically this tells here. Distribution rule link general ledger and cost accounting. So we are able to link our general ledger with a cost center. So what is the benefit of it? So that basically means the cost submitted. Now look at this statement carefully. What is the benefit of doing all this? So benefit of this is the cost submitted to a GL. So when we do a cost and assign to a GL, so let's say we're booking electricity bill, when we are booking some bill or some expenses or whatever that expense could be. then that expense get also assigned to GL. So cost submitted to a general ledger in the cost accounting automatically link an account to a distribution rule. We did that. So what we did, we take electricity bill 61000, we link that GL account to a distribution rule cost C002. You can link account type sales and expenditure. So SAP allows, so if you go back here, if I close this, if I go back to the chart of account, in chart of account, we have a different buckets here. So there's an asset account, liability account, equity account, and different account. So SAP allows us to assign it to different type of our sales related, expense related accounts. And if you go back here, so this is expenditure. If you go to, now, if you go to equity account, we don't get that. So in case of equity account, we are not getting assignment to the cost center. When we have a liability here, and if you click on it, liability, it is not assigning me to the cost center. If I go to other accounts, so let's say my expenditure account. So expenditure account, when I click on the expenditure account, then it comes. So SAP allow my sales accounts, my expenditure accounts to assign to this, because that is what is more related to cost accounting is. So that is what we say here. The cost can be submitted to a general ledger in cost accounting and account type sales and expenditure. We talked about distribution rule, how the cost of the revenue and posted to an account and to a cost center. So basically what is happening is, so we can have a GL. So the cost assignment, the flow of cost assignment. So we can do a GL, and from the GL it goes to distribution rule, and from the distribution rule it goes to cost center. Second is we assign to distribution rule and from the distribution rule it goes to assign to the cost center. Okay. That is another path. Okay. So that is the, and we're gonna check both. This is called indirect assignment. This is called direct assignment. That is what we have. In the indirect cost revenue allocation, you can define percentage also. Okay, I have a cost of total 500, 200 goes here, 200 goes here, 100 goes here. Okay, now, so what we have done so far, we have created a cost center. So we created a distribution rule. That is a C002. We created cost center. C002. Okay. Now, let us say I'm creating a sales cycle. Distribution. Now, let's create a sales cycle. So we're going to take some scenario. So first I want to take a sales scenario. and assign cost and revenue to a cost center. Okay, let's do that. So that is the one scenario we want to do first. So now we come out of here. I go to sales module. In the sales module, I create a sales order. And I select any of my customer, whatever. I select an item and select any item which we are selling. And then this is the amount, we can take 1 piece and 2 piece and 3 piece, whatever quantity. And then if we look at here, there is a department that is the sales office. Okay. So there is a sales office we are assigning. This assignment can be done automatically also. I'm assigning manually so we can see how it is. Otherwise, from the GL account, this assignment of cost center can be automated also. So we assign this to this department. We enter sales order. And then we save it. So what happened? We create a sales order, simple sales order. We create it. After creating a sales order, the next thing which I want to do, I want to create a delivery. So this is the delivery. And in the delivery, so this is my delivery document number. This is my item number, item description, unit of measure, 3 quantity, unit price is 18,000. The total amount is 48,060. And then the department which we are assigning is C002. And then we add. And then we add. Okay. So now what happens is, if I go to this delivery, and then if I go back to, there's a journal entry here. So at the time of delivering the product to the customer, there is a delivery. Now, what is the entry in the finance? So entry in the finance is that my finished good inventory account is credited. So here what happens is, so we in the sales scenario, we create a sales order and assign the cost center, because I want to book revenue in sales cycle. And then we create a delivery document. And in the delivery document, we have a journal entry. In the journal entry, what do we see? In the journal entry, we have following entry. Credit our stock account and debit our cost of goods. That is the classical entry happen at the time of delivery. That's what we see here. So this is a stock account. This is account got debited for 37,000 and 37,000 and $751.89. And the cost of goods sold, 37,000 has been. Now, how do we determine the cost of goods sold? There is a different valuation methods and all that. There's a different thing that how system determine 37,000, because that is another discussion. But that is on the basis of whatever the cost per unit we have assigned and the inventory valuation methods. So it finds 37. Now, what also it does, that here in the right-hand side, it tells me that it is assigned to the department C002. So that department C002 also get assigned and updated. And it is this assignment. Now, after closing this, okay, close this, then I want to go to financial accounting. I want to go to cost accounting, cost center report. And let us say I have a different cost center here, C002. And I take C002, which is our sales office. In the sales office, we have done some sale. Okay. Now, what do we have here? So what system tells me that in this cost center, sales office Chennai, I have an expense of 37,751 and 89. This came from COGS. Because in general entry, my COGS was updated for this amount. Revenue is 0 because we have not yet billed it. So the revenue is still 0. So we close that. We close that. Now I want to go back to the delivery document. This was the delivery document. And after creating this delivery document, I want to copy this delivery document into my invoice, which is my customer invoice or ER invoice. So I go to ER invoice. So this is my ER invoice. In the AR invoice, so this is customer invoice. This is my item number, 3 quantity. 1 quantity is for 18,000 and some discount, and this is a price after the net amount. This is my gross, 48,000 is my gross revenue. Okay, so now I go back and then I want to post my customer invoice. So what we did, we posted a customer invoice. In this customer invoice, also as posting, then I go to journal entry. So here in journal entry, what do we see? So we see here there's a customer C0020 Maxi Tag, that's the name of customer. This customer has been debited for 49,962.42. So here, what we did next step is we create a customer invoice. In the customer invoice, we also again have a journal entry. In journal entry, what do we see? So we see the debit, customer account, and then there is a debit, credit, sales revenue account. So there is a credit to the tax also. There is a 1,922 rupees tax also. So that is also credited because we take a 4% tax. So there is a credit to tax account. So these are the standard entries, as we all know, happen. Automatically entries, these are taking place at the time of invoicing. Now, what do we also see here is that automatically the sales revenue account of 48,000 is got assigned to this department, which is sales office Chennai. That basically means the sales office in Chennai has made a sale of 48,060.00 rupees. Okay, I close that. I close that. Close that. I again want to go to my cost center report. This is my cost center report. If I go to cost center report, I want to go the dimension of my department. I want to go to from cost center C002 to C02 because this is the cost center we created today. We can have a due date, sort date, till this date, whatever. And then we want to hit enter. And now, what do we see? So we have in this cost center. So this is my C002 cost center. So the first line is dimension. In that, this is the cost center C002 sales office Chennai. In that Chennai, I have an expense of 37,751.89. So this is my cost, which is coming from cost of goods sold. So this is the COGS value. And then here we have a 48,000 coming up as my revenue. And that revenue is coming from customer invoicing time. So this is my expense, this is my revenue. These are the direct allocations. Direct allocation basically means within the sales document, we have assigned which is going to be my particular cost department. And because of that, system has automatically determined that. And then we have a total profit of 10,308.111 because 48,060 minus 37,750, the net is 10,308. So this was an example of how system update my cost center at the time of sales. Now, and then we can do our P&L because it gives you my revenue, it gives my cost. So if that I want to do my the entire revenue, I can get my entire revenue. So let us say I want to do the purchase cycle. So I go to purchase order and I create a purchase order and I select some vendor, select some item, and I'm buying some item, whatever that item is. Okay. So buying that item for $9,000, price is 9,000. And then here also we have a department and I assign my sales office Chennai. Now I'm assigning manually, as I mentioned, this can also be assigned automatically also based upon the rule of assignment. So that can also be done. So we have a both choices. So now we have assigned that department automatically here. Then we add a new. So we add here. So we enter the delivery date. Okay. So now we create a purchase order. So this is a purchase order. And after purchase order, we give it the purchase order to the supplier. This is for 9,000 rupees. We are buying some rainbow printer. So for our office, Chennai office is a new office. We are buying some printer. And then we say copy to, and then we do a receipt. So finally, this printer has arrived in our office. And then the next thing which you do, go receipt against PO. So the GRPO. And then we go down, and then we have an item and an add. And we say yes. This is a serial number item. Oh. Okay. So we entered we need to assign serial number because that was serialized product, which is fine. So in SAP, you can do serial number and all that as well. Okay, now we go to general entry. Now here, this is the journal entry which happens at the time of, and then we can define somehow that, okay. So here we can assign my cost of good, I have a good receipt against PO, and this is my department. And if I see my journal entry, now here in this journal entry system, what does system do? It stock is debited, and then there is a clearing function. That is what we see here. So we close that. We see the accounting document. So we go to now sales cycle, sales scenario. In the sales scenario, we create a purchase order. We create a good receipt. When we create now purchase scenario. Now in the good receipt, what is the journal entry? So journal entry is debit to and credit. So debit my inventory account and credit my clearing account. Now, I also wanted to do something called invoice verification. There's a vendor. Invoice. So vendor invoice. Now in that vendor invoice, so I go back to vendor invoice. So this is the journal entry. And then we have here copy to, we go to vendor invoice. So now we got this item. And then we have AP invoice. And then we go back. Hit enter. Hit enter. Okay. So now this is the vendor invoice. Now in the vendor invoice, we go to journal entry again. Now this is what is happening at the time of vendor invoice. So here my vendor got credited for $9,000 rupees. There is a tax which is debited and clearing account got debited. So here in the vendor invoice, what is my journal entry? Journal entry. In the journal entry, we see following. So we credit our vendor account, debit our clearing account. So this account, the clearing account, actually it get credited here and it get debited here. So finally, this is a GIF clearing account that get nullified. Then we debit whatever tax. So we got the item. So we got the item. Now, what I'm going to do is we go back. Okay. So now let us say I want to go to goods issue, inventory account. So I have go to inventory transaction. I go to goods issue. And in the goods issue, I select the item, whatever item. So I select some item, mouse, which I purchased, quantity 1 in this warehouse. I can assign the project and then assign the cost, sales office. And we add. And then we add. So we receive the material and then we issue that material to that department. And if I go back here, so this was my account, quantity 1, and this is the cost, 680 rupees. If I go to general entry here, so here my stock account is credited, my stock consumption account has been debited, and then cost has been assigned to the cost center C002. So now let us check my cost accounting report. So we go to cost accounting. So we go to cost accounting report here, cost center report. Put by department, cost center, from this cost center, cost center, this date to this date, and we hit enter. So now my cost has gone up. Now this is a little confusing because I get a 38,432, and if I see that my profit has gone down, it earlier about 10,000 something. Now because we have some expenses, so it gone down to the 9,000 something. So I want to see not by distribution rule, I want to see it by linked document. So I want to see individual document which has been posted, because this is a lump sum entry. So it become very confusing to bifurcate. So now here we can get each individual line item. So in each individual line item, so this is a 1, 2, 3 posting, which has been done. Now in this, so this was my DN, delivery note. In that we got a expenditure of 37,750 because that was my cost of goods sold. And that is what we see here. And so we got C002. And that got assigned here. And that is 37,000. Then I have that 680. So apart from that cost of goods sold, so this 37,751 coming from that cost of goods sold, and then 680 is coming from that mouse I purchased. So that electronic item I purchased, and I assigned this to this department for $680. So this cost also get assigned. If I want to go back and click on it, I can see that my stock was credited, difference account was debited, and then my department was assigned. So that is the department C002 was assigned when I issue that material. So that cost of the purchase and consumption get assigned. And now if I go back on the revenue side, there is only one revenue item. So that is 48,000. So this is 48,000. This is coming from this document. So ultimately there are 3 documents. This is, if I click on this document, so this is my revenue of 48,600, 48,060 rupees. And these are my different documents. And if I go back on the right hand side, then I can see if there's any project, you can see by the project also. In the total, system will tell me that, okay, what is my total net profit. If I see my revenue and expenses is 9,637, 48,000 is revenue, 37,000 is minus because that is a cost of goods sold, 680 is a consumption of that electronic item which we assigned to it. So 37,750 plus 480, that is minus this, and net become 9,620. So this Chennai sales office, if I see my cost revenue is still in the positive by 9,600 2027. So that is what the system does the report. Now, we saw the sales cycle, we saw the purchase cycle, we saw the goods issue. Now, what happens if I want to create a journal entry? Because many times we are booking some expenses directly. So if I'm booking some expenses directly, so let's say I go to directly creating a journal ledger, some miscellaneous expense and something I want to assign this, and many such things is possible. So I go to journal entry here, and then here, let us say I select some, my account. So I can choose the one I want. So here, see to vendor 1000. Okay, it's not. So we can choose. So these are different accounts we can choose. And let us say I have here so many accounts. So this account I am crediting. And then I can take another account, whatever. So one account is credit, another account is debit. $1,000. Now, if you see here, we have assigned this electricity account. And because this electricity account is already assigned to this cost center, C002, it gets automatically determined. We didn't enter it manually. We just select the GL. And because the GL is associated to a cost center, it comes automatically. And do you want to change? Yes. So general entry was done. So this was the general entry for that electricity account, $1,000. And if I want to go to cost accounting, and I want to see the cost accounting report, and now I have this $1,000 appearing as well. So we have a 37,000 for the cost of goods sold, 680 because we had that, and then now we also have $1,000 cost which is being associated. So that is the CSR. So there could be many scenarios, but I just wanted to go through some of the basic scenario. It is already more than an hour now. So now I will give few minutes for if you have any questions. So please let me know that, if you have a question, I'll be happy to answer. So anybody, any questions? Okay. Any questions? Anybody has? Okay, if there's no question, I think then we are done for today. So thank you very much. And, so Hello. Any questions? So, Pankaj and Mr. Jain, so we can conclude now, I think, right? Mr. Jain.
Yeah, Mr. Dilip. Mr. Rao, I think he is on mute. Let me check. Mr. Rao, please unmute yourself.
Yeah. Dilipji, can you hear me?
I can hear you now. Thank you.
Yeah. Thank you. Thanks a lot, sir, for your excellent presentation. The inputs given by you are very valuable. I need to ask 2-3 questions. Sir, can we implement activity-based costing in SAP Business One cost accounting module? Do we have that provision?
Yeah, with the that is called line of business. Yeah.
Oh, that is called line of business.
Yeah.
So we can do that, right?
Correct. By using so there are so we look only one dimension. There could be five, as many as 5 to 6 dimensions. Like we talk about department, line of business, in locations. So there could be 5 dimensions. We just look at the one dimension, which is department. We did some basic transactions. So if you want to do by activity, then it comes to the line of business.
Okay. Sir, there is one more thing I want to ask you. What is the internal order option in this module? Because generally I have seen people talk about the internal order option in SAP PICO module.
So in SAP B1, internal order is basically handled using the project module. So what happens is, so internal order is basically a cost object where you can assign the costs for a certain period of time, and after some point of time that. So normally the cost center and profit center is a long-term cost object, and internal order is a short-term cost object, which basically means that you are doing some work in the company. Let's say some boiler or some heat exchanger is being put in. There's internal order, so all the different cost and other things is being put into that internal order, and then finally that internal order is settled. So in SAP we do that by using project module.
Okay. My one of my friend, Mr. Gopal Rao from Ghana, is asking: is multiple currency allowed in cost center and report in single currency?
Oh yeah. So you can have a parallel currency concept. So let me see if I can show that. So you can define multiple currencies. So let's say this is the transaction we did today. And if I go to my delivery and if I go to journal entry. So if you see here, so this is the journal entry which happened at the time of delivery. So there's a debit and credit. And then if you see here, there is a Indian rupee, and this is US dollar. So here, all the automatic entries are done in 2 parallel currencies. So one is in Indian rupees and second one is US dollars. So you can do all, and you can define the conversion rate between US dollar and INR, and system will automatically correct. So you can, this INR is my local currency and this is my system currency.
There is one gentleman, Mr. Chandrasekhar, he wants to know what is a distribution center?
distribution center is, so there is a distribution rule here. So distribution rule, basically what we distribution center is a different concept. What we are talking here is a distribution rule. So what we have discussed is something called distribution rule. So let's go back. So see that here, distribution rule. Now in the distribution rule, what we say here is that based upon different, so this is my distribution rule C0002, effective from this date to this date. And this is for marketing department. And then 100% of my cost get assigned to this cost center. We can also say that in case of this distribution tool, 60% cost go to this cost center and 40% goes to this cost center. So distribution rule allow you to bifurcate the cost into one object or multiple objects.
There are few participants who needs a copy of this presentation. Mr. Dilip, can you hear me? Hello? Mr. Dilip, can you hear me?
Dilip ji, please.
Yeah, sir, can you hear me?
Dilip ji, please unmute.
Mr. Dilip? Hello, Dilip ji? Hello? Mr. Dilip? Pankaj ji, can you hear me?
Yeah, I'm hearing you. I think.
Yeah. I was, I think mistakenly whatever muted. So I think, can you hear me now?
Yeah.
Yeah, Dilip ji, I can hear you. A few of the participants, they are requesting for the copy of this presentation. I would request you, once you're done, please share the same with us so that we can distribute to members.
Yeah.
Okay, sir. One more thing I want to ask you: what is the importance of GR and IR, goods received and invoice received clearing account?
So in SAP, what happens is in the business also for that matter. So when we look at the scenario, so here we have when we are doing a purchase scenario. So when we do Guru receipt, then we have a debiting inventory account and then crediting this GIA clearing account. This is just a clearing account. So this gets credited at the time of Guru receipt, and at the time of vendor invoice, it gets debited. So ultimately, at the end of the process, in ideal situation, it gets nullified. So in all situations, so total debit and total credit of clearing account should be 0.
Okay. One of our members is requesting how WIP is accounted in SAP.
Yeah, you can do a WIP work at the time of production. So when you're doing a production, so we can define different accounts. So there is a raw material inventory account, there is a finished good inventory account, and then we can also in the production define work WIP account also. So for that, so in SAP there is a concept called staging. So stage by stage, if you want to do stage 1, stage 2, stage 3, and by every stage you can define different GL. So let's say this is a production order. And if you see then the production order, there is a WIP account. So what happens is when I'm creating this production order, when I'm receiving the finished good, it debit my finished good inventory. But in between, if I want to trace it and assign to a certain work WIP account, I can assign it to WIP account as well.
Okay. There is one more gentleman. He's asking, can we use production module?
Yeah, in SAP, there are actually 3 modules for production. Of course, we have 99% of our customer for the production. So in SAP, There is a resource module which do the resource capacity, production capacity scheduling. Then there is a whole production module. And then there is a third module, which is MRP, which allow you to do forecasting and planning. And based upon the make to order, make to stock, you can run a forecast run, you can run min-max labor. So there are 3 modules which are dedicated exclusively for the manufacturing, which is resource management, which allow you to do resource planning, activity planning and all that. And production is scheduling. Then there's a production module in which you can do bill of material production, confirmation production, receipt for production, issue for production, update, whole production cycle. And then you can also do MRP, in which you can do forecasting, you can do MRP visit, and you can do recommendations. So there are 3 modules which are dedicated to production.
Yeah, his question was, can we use production module with cost accounting together?
Yeah, of course. Of course.
Yeah.
So that basically means if you go back to, so if you see here, and remember the department we're talking about here. So that cost center,
yes,
that we can assign here also. So once you enable, it goes everywhere. In general ledger, sales cycle, purchase cycle, good receipt, good issue, production. So that cost element assignment can be anywhere. See that you can assign.
Okay. Sir, one more question. Do we have any online blog to learn more about this cost accounting module in SAP Business One?
Means there are many, but we can discuss. If anybody has any further questions and all that, people can discuss. I try to make it in most simplest form, like because we had just 1 hour. So, if somebody want to address something else, we can talk about something else also.
Okay, okay. Pankaj, I am with my questions. If any members you want to ask any questions, you can.
Yeah, I think some audience were interested to ask question by themselves. So if anyone is interested, then they can unmute themselves and ask the question directly. Any member can unmute themselves. If you have any confusion, any question, any views, any thought. So I think already asked. So I think.
Hello, sir.
Yep.
Can you repeat the distribution rule 1 second, please?
Distribution?
Rule 1 second, please.
Okay. Distribution rule is basically how you want to distribute your cost to different cost centers. So if you go back here. So distribution rule. So let's say here we have this C0001 from this date to this date. And this is the production cost. Now what we are saying is, as per this distribution rule, 100% of the cost get assigned to this cost center. That is what this basically means. Guys, mute yourself.
Thank you, sir.
You can assign, you can do bifurcation also.
Rao sir? Rao sir? Rao sir? Dilipji, I think your session is through. Now you can stop sharing the screen.
Okay. Thank you.
Okay.
Take one
Pankaj, I think are there any more questions? I think all the guys have asked the questions. Okay, then I would request you, Pankaj, to as a token of appreciation, let's present a certificate of recognition to Dilip ji.
Yeah, sure. So I have a esteemed pleasure to present this certificate of recognition to Mr. Dilip sir. Thank you very much, Dilip, for enlightening us. Thank you so much. You have seen this certificate, Dilip? Now, sir, this certificate was visible?
No, it's I'm not able to see on the screen, but yes, I have it. I will share it with.
Let me go again. Now it is visible.
Yes, it is. Thank you.
So thank you, Mr. Dilip. I think the certificate of recognition is visible on the screen.
Yes, thank you.
Thank you so much, Dilip, for sharing valuable thoughts with us.
Yeah, welcome.
Thank you so much. Thank you.
Thank you.
Okay.
Thank you as well, and everyone else for arranging it, and we appreciate that.
Thank you. Pankaj ji, we can close the event.
Yeah, actually, I will to share some few words. So, as you are aware of that, there was a long weekend. So that is the reason that our participation was low. But nevertheless, there has been a very overwhelming response to these sessions. And as a matter of fact, close to 400 persons have seen the video uploaded by us for last session. So I'm sure that when we'll upload this video, then it will be seen by more and more audience, and whatever efforts Dilip has made. So nevertheless, the effectiveness will be created, and they will take the benefit from the very, very useful insights from the Dilip, because cost accounting is a very, very important subject. And the very importance which I got from the session of the Dilip, that by doing the financial accounting, you can get the cost accounting consequently without much added efforts. So Dilip has very nicely, explained the distribution rule. So I think most of the audience were also very keen to know the distribution rule. So it is nothing, but it is a cost accounting method used to allocate direct and indirect expenses and revenues to one or more cost centers. And it contains information regarding the portion of the fixed amounts of the expenses or revenue to be allocated. So it is a very, very important that by understanding this distribution rule, so while performing financial accounting in SAP Business One, you can also have the cost accounting done consequently without any much effort. Dilip, I think I am right in my understanding.
Yes, thank you.
Yeah, so that is very, very important. So I'm really very thankful to Mr. Dilip Mandal, Dilip Sad, and this Ronak and his team, who are continuously devoting time to conduct these kind of sessions. And today is the second sessions. To more sessions are yet to go. And I'm really thankful to Dilip you for your time devoted by us for today's session. Thank you so much, Dilip. Thank you so much, Ronak. And thank you, Rao Saab and entire team of the Indian Society of Management Accountants. We miss the Dr. Amin Kumar, our president. He was not available today. And nevertheless, last but not least, we are very thankful to all the audience, all the participants who attended today program, to the session. Despite we are having the long holiday, and most of the people are busy in the long holiday, but we are very thankful who attended and who made the convenient to attend to the program. Thank you to all. Thank you very much.
Thank you.
So shortly we will upload the video of this program in our YouTube channel, and you can have the link on cmaonline.in, and you can view the video of this particular session, and you can also share the video with your concerned person or in your network, so that they can also have the benefit from the same. Thank you so much. Thank you.
We will do that.
Thank
Thank you.
Thank you. Thank you.